In this weekend's video, I want to examine the possibility that we may have started a new secular bull market. So let me start off by saying that that's not my first choice. It's not my expectation. My expectation has been that the insane monetary policies, global QE for many years, keeping interest rates too low, too long, my expectation is that will create another series of bubbles. But when I look at a long-term chart here, this looks like a pattern that we have seen before in the 40s and then again in the 70s, where we've got this multi-year secular bull market followed by a multi-year sideways consolidation bear phase, and then a breakout, which would signal another multi-year secular bull market. So if I just look at the charts here, you have to keep an open mind that perhaps we are starting a secular bull market that will be driven by the technology sector in general, robotics, biotech, advances in transportation, autonomous cars, electric cars. Just the entire technical sector period is advancing at an exponential rate at this point. So, if you keep an open mind, I could make a case that technological advancement that we're now seeing could be driving a new secular bull market. So let me zoom in a little closer to our current bull market and explain what I think is going on. But again, keep in mind that I may be wrong here, and that we may be starting a new secular bull market. But my feeling is that when price broke out of this long-term bull channel, it was a signal that the ending phase was beginning, and we were going to start the vertical phase of the bull market, and then proceed into a parabolic move into a bubble top, which would then collapse. That is my preferred thinking. All the years of QE and interest rates at zero for many years was going to ultimately lead into just another series of bubbles and multiple currency crises. So my current stance is that the dollar is going to enter a bear market, and that bear market will push all assets up. The first to enter a bubble would be, in my feeling, would be the stock market, the tech sector in general, the Dow, and these would, once they break out, would start to advance rather quickly, and then that advance would turn and accelerate into a parabolic move, which would, of course, be a bubble, and then the bubble would pop. So as of right now, we have broken out of this bull channel in both the tech sector and the Dow. We haven't done it yet in the S&P, but I am seeing some signs that this may not turn out to be a parabolic move. This may turn out to be a runaway move, which is despite the name, is a different kind of chart pattern than a parabolic bubble. A runaway move, while they can last many months, 6 to 8 months, it typically just kind of forms its own little channel and is characterized by a steady grind higher, followed by or consisting of multiple very small, very mild corrections. In those corrections, they all tend to fall into roughly the same magnitude. So assuming we don't continue down next week and that we do turn and go up and break 2600 on the S&P, then we are going to have 3 corrections that have all measured about 35 to 40 points. And that's kind of what happens during a runaway move. You grind higher, and then out of nowhere you'll get this little measured correction that in our case it seems to be about, well, let's call it 35 to 45 points. And so you'll drop 35, 40 points, and then the correction will be over, and then you'll start to grind higher again. And then again, for no apparent reason or out of nowhere, the market will again correct, and that correction will run 35 to 40 points, be over pretty quickly, and then the grind higher starts again. So that's the characteristics of a runaway move. And if we turn and go higher next week and we break 2600 on the S&P, then we're going to have 3 of those 40-point corrections in a row, and that's going to indicate to me that the odds are moving significantly in favor of this being a runaway move rather than a parabolic move. and if that's the case, then we go back to that original chart that I showed. So if this right here is not going to turn and accelerate, rapidly higher into a parabolic blow-off top, but instead is just, a run-of-the-mill, so to speak, runaway move that is just going to maintain this channel here and just keep grinding higher, maybe even into the middle of 2018, and then we get, a sharp correction, and that's usually how these runaway moves end, is they'll end with a very sharp crash at the end. But that would signal to me that we are indeed in a new secular bull market, and that this is not an ending parabolic blow-off top like what I am expecting. So next week may be important. If we don't get a deeper correction that then sets up the market for a very rapid advance, this vertical phase starts to really accelerate higher and turn into a parabolic move, that would be an ending move, and instead we just continue this runaway type move, with these small little mild corrections, and this just continues over the next 2, 3, 4, 5 months, then I would have to say that we've probably started a new secular bull market that still has maybe 10 or 15 years to run yet, and will be driven by just exponential advances in the technology sector in all of the areas that I mentioned earlier, and probably in areas that we don't even foresee at this time. So I'm going to keep an open mind that perhaps I am wrong. We are not starting a parabolic ending phase to this bull market, but instead, we are still very early in a new secular bull market that potentially still has 10 to 15 years to run.